Good afternoon, everybody. Welcome to your weekend edition of the TraderMerlin Show. It is Friday. Hope you had a great session out there, even with the nice down moves out there. I was actually anticipating some nice up moves, but you got to love some, let's say, employment data or economic data that just kind of throws us for a loop. Anyway, we'll get into all that as we progress through the show. Big shout out. I know we're going to have a small group today because it's Friday, but shout out to Les. We got Zanzibar, we got Rob, we got Doug, Vernon, Randall, Thomasina, Judy, Ivan, and NB. Randall, you said 72 degrees here in San Diego. Slayer Payback, is that the song you're listening to? A little Slayer Payback going for some heavy metal. I'll tell you what I'm listening to. Actually, a Dexter Wansel, Life on Mars. I guess, going into the weekend, you should all have kind of a weekend mantra song. That's mine. Not a lot of lyrics, but just some good groove. And I guess for those of you who never heard of Dexter Wansel, some crazy, synth 80s stuff, I just put a link into the show right there to the song so you can check that one out. But anyway, cheers, everybody. If you got a frosty cold beverage, I cheers you. If you're just drinking water or orange juice, cheers as well. All right, let's get into things. So as you notice by my graphic here, I wanted to have a little bit of fun with this one. This is a picture of the EDD, the Employment Development Department, for our Trading Week wrap-up. Why? Well, the economic data. Let's take a peek real quick at the numbers that came out today. Not very rosy if you're going to be looking at the long-term picture for our markets. Where is my pen? There we go. Still not got my drawing tools done. So you had a couple different things. Number one, we had non-farm employment change, which went from 436. The expectations were 325. We came out at 390. So all in all, this is actually a decent number, right? So you hear so much say about how bad the numbers were for employment today, blah, blah. This isn't that bad. Even though we had a 46,000 job contraction in non-farm employment, it's nowhere near the 110 that they were expecting. However, if you look directly below that, you have the first uptick we've seen in unemployment for a while. Well, not uptick, but at least it stopped declining. So we were at 3.6% unemployment. They expected to drop to 3.5, and we stayed at 3.6. So given all the good hiring and job numbers we've seen from the JOLTS job openings and a lot of other job data, expectations were that, more people going back to work. And, I don't trust the data, but the fact that we didn't decline sent a little bit of a shiver through our financial markets. And let's run through from the bottom. Here's your NASDAQ chart for the day, basically erasing every single percent gain from yesterday's session. So you have this, I believe it's almost a tweezer top. We need to have one more attack at it, but that is a pretty ugly picture erasing all of yesterday's gains, which were so exciting. I thought we'd have some follow through. We had nothing, no follow through whatsoever on the NASDAQ, down 2.62% on the day. Finally something that performed worse than Bitcoin. Unbelievable. We finally have something that performed worse than Bitcoin today. And that was the NASDAQ 100. But nipping on the heels there was Bitcoin, down 2.15%. But really, from a technical perspective, there's nothing noteworthy here, right? Everything just kind of traversing sideways, kind of boring, no big deal. Now, let's move up that ladder to the bigger indexes. NASDAQ was obviously a big one, but here we have the S&P 500. It was down 1.58%, closing at 4,109 on the session, which really puts this week into a lot of chop. We had 3 down days, 1 up day, and of course Monday being closed. So just lots of sideways choppy action because Tom is actually taking, I think he's in the trade plan class at Online Trading Academy today. I have to draw some yellow boxes so we can surprise him when he comes back. But there is kind of the yellow box that formed for this week to all the tips and tails. Keep your eye on that. My guess is we'll probably traverse sideways in there a little bit. And when we break out, there's your opportunity, both long or short. Now, gold, down 0.95% today. Same thing. It pretty much erased all of yesterday's gains, although it wasn't quite as bad. Good news for me anyway. Still trending up. Obviously I'm very heavy in silver and looking bullish towards silver. Gold hopefully going to continue this short-term uptrend that we've seen that started back on May 16th. It's been making higher highs, higher lows, so hopefully this will traverse and continue on up. For those that want to know about silver, there's your silver chart, which looks almost the same as gold. It just doesn't have the topping tails because obviously gold is, what we looked at there is gold futures, and this is the silver ETF, so you don't typically get the tails or the big volatile looking candles. Moving our way up, third place for the day, Dow futures down 0.95, same picture as the other markets, right? Just chop, 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 sideways action. Hopefully we'll get some clearer move next week. We do have a couple of central bank announcements happening next week as well, which could steer this market and create more volatility. Russell 2000 comes in second place, which actually looked really good. You'll notice that the candle that formed today was nowhere near as big as it was with some of the other ones, kind of holding near the highs there and not giving back all of yesterday's gains. So that's an interesting divergence compared to what we saw with the Dow, the NASDAQ, and the S&P. The Russell kind of doing its own thing. Even though it was down 0.8%, it's nowhere near what the other indexes were. So all in all, a fairly decent day for the Russell, even though it was red. And there is just one nice positive one. We talked about this ripping through and potentially challenging that 130. Again, we struggled at that 115 mark, and now all of a sudden, 2 consecutive days of big green candles ripping up. You notice if we look off to the left over here, there's nothing really to stop this movement until we get to at least 124.50 on crude oil. And right now you're at 120.32. So I think some potential moves up here further in the crude oil market, going back up maybe these not all-time highs, but most recent highs about around 130.59. We'll have to wait and see. Certainly don't want to see gas prices spike as we get into the summer months, and unfortunately that looks like what's happened. So cheers to all the taxes generated in California on all the gas I'm going to be buying over the next few weeks. All right, so to dive a little bit deeper into some of our topics today, I want to make sure I get a chance to go to your listener questions. I had a bunch of them that came in, and in those listener questions, we're all across the board. I mean, I have some that were very focused on a specific trading topic. I have some that were from left field, and I'll do my best to get at all those. So Joe says Fed rate hike next week. Not for the U.S. For the U.S. is going to be on the 15th, so the week after. This upcoming week, off the top of my head, I think it's Tuesday at 12:30 a.m. Eastern Standard Time, we have the Australian dollar, and then on Thursday at 7:30 East Coast time, we have the ECB. Now that's interesting because, sorry, that was my thinking pose. I've got so much information in my head right now. I just need to compartmentalize it. I cannot remember all the economic announcements for next week, but that was off the top of my head. The interesting thing is, if you look at what's gone on with Australia, so it's the RBA, it's a Reserve Bank of Australia. They were at 0.1%, and they really have been stuck at 0.1% for years. And all of a sudden, they jumped to 0.35. Now the expectation on Tuesday is they're going to jump to 0.75%. I believe that's right around an 80% probability that's going to happen. So anybody trading the Australian dollar or the euro, for that matter, next week is going to have a little bit more volatility in their currency pair. So there you go, Joe. Just want to make sure you got that one. When will you invite us down for Friday whiskey? Where do you want to go? Where are we going? We do a remote show. There's a bar down the street that could probably get them to let me do a remote show. I just have to figure out how to do all the switching and how to do the stream, because obviously I have high bandwidth here sending all this video. But you want to do a whiskey meetup? Let's do it. I'm fine. Why not? I like a nice cold glass of whiskey on a Friday afternoon. So back to the economic data. This is kind of what freaked everybody out. You can see, obviously, the numbers aren't that bad. I got to say, they're not like atrocious numbers. Now, if unemployment rate came out at like 3.9 or 4%, then it's like, oh crap, we got some problems here. But I think the prevailing sentiment is kind of what we talked about yesterday, right? That the trends are changing. So let me bring up the employment chart here, or unemployment rate. And if we look at this one, the trajectory, it's still down. But this is really one of the first times we've seen it kind of level off here. So 2 consecutive months. I think this is what has everybody freaking out. I'm not that concerned. It's if we start to see a sharp increase, and all of a sudden we get back to 4 or 5%, then again that stagflation argument comes into play, and then I think the market really starts to panic. Now, the other thing that I found interesting, obviously we titled yesterday's show the economic hurricane dead ahead, right? And that's because of Jamie Dimon and John Waldron of Goldman Sachs, who are 2 major heavyweights, basically saying, we're scared of the markets. We're fearful for the future. Then you had Elon Musk saying, it's going to get really ugly or something like that. I forgot it was exact quote, but it's going to get really ugly or I'm really concerned about the markets going forward. Then you couple into that what Tesla just announced, Coinbase. Man, I'll tell you, it's kind of funny. I saw a job opening for Coinbase. Now, for those of you who know me, I am loyal to Online Trading Academy. I'm a huge fan. I love what we built over the years. I think right now it's probably the best ever because we've weeded out a lot of instructors with really big egos. We got rid of one particular scumbag who I think just ruined the content and made Online Trading Academy a horrible place, not only to work but to learn. And that scumbag is now gone. He's out in Chicago. I am loyal to a fault to OTA. However, I did see a job opening at Coinbase, and the job was, we want to have a senior director of content for cryptocurrency. And I was like, I looked at the resume application. I was like, holy cow, this is exactly what I pretty much do on a daily basis. This is my JOB at OTA. I'm building content. I'm designing educational flow. I'm creating all the materials, all of it. And I was like, you know what? The pay was extremely significant. They had a huge hiring bonus. They had all kinds of stock options. I was like, maybe I'll send that resume in. And I thought about it, and I missed the deadline. I was like, whatever, it's fine. I'm happy where I'm at. Luckily, I did that because Coinbase is now rescinding most of their new hires, most of their offers, right? They made a whole bunch of offers, and if you go to Coinbase's website, there was easily 100 jobs up there for everything under the sun. Not only is Coinbase slashing jobs, Kraken is slashing jobs, Tesla has said they're going to lay off 10% of their workforce. So, we look at this unemployment number. This is not reflecting any of that. And all of a sudden, I think that you wait. I don't know if it'll happen in July's number. My guess is in August number, we will see this not only stop going sideways or down, but start to tick back up. That's my guess, is August we'll start to see more corporations laying off, starting to streamline things. Because as we mentioned, everything is starting to tighten. Money's becoming more expensive. When money's super cheap, Coinbase and Kraken and Tesla can just expand and expand. I can buy because money's cheap. Now all of a sudden, those headwinds are starting to get a little breezy out there. So I think that's part of the reason why you're hearing about these markets getting weaker and seeing prices drop as they did today. So the unemployment numbers weren't horrible. Yeah, I won't leave OTA. I'm pretty solid there. Unless, I'm also an opportunist. So if something comes up that is so groundbreaking for me, I'm a person... Unfortunately, I've become rather stagnant in this, but I think that all of us should be doing this, which is constant improvement, right? Constantly learning something, constantly doing something. I mean, I'm not concerned about leaving a legacy behind because I don't really have any kids. I have a German Shepherd, but that's about it. But for me personally, like, learn, grow, build, challenge yourself to do things that are outside your comfort zone. And if an offer came along to design like a global cryptocurrency program that was going to have millions of dollars funding it, and I could build from bare slate, that'd be pretty damn interesting. But, we'll see. All right. So that was the first part, was looking at the economic data. Fairly ugly. Markets did not look great today, as you guys all know. There are some areas of that market that look worse than others. So let's look at the indexes, right? Those were pretty ugly, but the dollar index actually showing a little bit of stability here and holding. Now, the question for me is, where do we go going forward? As you guys know, I am in the camp of moving back up towards 105 on that dollar index. I just think because the Fed's starting to unwind their balance sheet, that it's almost destined to move higher. I could be wrong, but that's just my opinion. And then you look at the bond markets today. Of course, we don't spend enough time on bond markets unless Bill Addis is here, but that yield... You notice we've surged significantly. We've almost surged 25 basis points on the 10-year in just 5 days. That's fairly significant. And again, get back above 3%. We have to start to look to that left and say, well, where are yields going to go? Well, my guess is you're looking at 3.25 for sure. And after that, you start to look at 3.6, 3.7, and then maybe even higher numbers. Yeah, Daniel, no kids that I know of. Pretty sure no one's ever asked me for child support, so I guess I'm okay with that one. You funny. And then what else do we want to look at? Oh, so there was some currency chatter, right? We talked about Australia, Reserve Bank of Australia coming out with a rate announcement next week. So we'll just take a quick peek at what's going on with the AUD-USD. Most of the currency pairs against the US dollar over the past couple weeks have done rather well. So you can see here the Australian dollar has had a nice 3-week bounce to the upside, But look at the daily picture. You know, it really is a downtrend. It's a question of, do you short back into this retracement here? You know, today was a fairly decent opportunity for anybody trading the Aussie dollar to short the supply zone. I mean, it came ripping up into this great supply zone, and then a nice sell-off day today. Now, the euro is the other one that's reporting or making a rate announcement next week on Thursday. You can see their chart still not looking great. I don't see any reason to go long on the euro at this point. It feels like a short the rally kind of thing. You know, you're in a downtrend, so short the rallies into supply and just keep on betting this thing's going to keep dropping. They're one of the only countries out there that's not raising rates. Remember, U.S. has already raised 25 basis points, then we raised 50 basis points, and now we're going to potentially raise another 50 in 2 weeks. Well, you have Australia has now raised twice, going from 0.1. They're going to hit 0.75 on Tuesday. And the European Union, ECB, saying we're going to keep things at 0 until 2024. Boy, I tell you, if you don't start raising your rates, that inflation stuff's going to get way out of control over there in Europe and could be a big problem. So they're the one that's going counter trend to what every other country is doing. Very interesting to see. All right. Again, type in questions if you got them. I am here to answer questions for you. And I want to get to some that came in. These were sent in to TraderMerlin@gmail.com. But if you want, I like making not a spectacle. That just sounds wrong. But I like highlighting the questions that you guys send into the YouTube videos. So again, if you have questions, put them on the YouTube videos. Anyone, because I can pull them up from my control panel here. But preferably under the most recent show. If you have something you want me to cover, just let me know. So Echo sent this one to me, and he says, can you talk about the psychology about prospect theory? We have a tendency to weigh lower probability outcomes more heavily than high probability outcomes. How can we as traders overcome the disposition effect, loss, risk aversion? This is the ultimate in trader psychology, because I think prospect theory is what ruins most traders. Essentially what it means is we put more emphasis on things that are very low probability of success. How do I know this? I'm going to ask you guys a question here. Type it into chat. You have 2 horses in a horse race. You got a 50-50 chance, right? 2 horses in the horse race. And the one horse, for every dollar that you bet, it wins 50 cents. What's that? A 1 to 2 odds, right? I think that's what it is. 1 to 2. So every dollar you bet, you get 50 cents. And then the other horse is for every dollar you bet, you're going to get $2. So I could have a 100% rate of return if I bet on horse B, but if I bet on horse A, I can only get a 50% rate of return on my investment. Which one are you going to pick? Actually, 200% on horse B, right? Bet $1, win 2 versus bet $1, win 50 cents. How many of you would pick horse A, the one that has, you're only going to win 50 cents? Or how many of you can pick horse B where you win $2? Same wager, $1, but one's going to give you a 200% rate of return. The other one's going to give you a 50% rate of return. Which one are you going to pick? Instinctively, most of you are probably going to say horse B. I'm going to go with the one that's going to give me a 200% rate of return. And we make those assessments, we make those wagers because there's so much more potential profit in horse B because it's got a 200% rate of return on it. However, if you look at the horse, you look at its history, it never won a race, it's way too slow, and the other horse A is so much faster, you'd be better off in the long run always betting on horse A. Now, granted, there you go. See, exactly. You got to know the horse, right? But normally they're going to have those odds on the horse because horse A is it's way faster, got a better track record, better pedigree. So the long shot, like for anybody who bet on that horse in the Kentucky Derby, congratulations. That was such a long shot gamble, but most people do that. They want to go on the long shot. What we have to do, I can't put we. I don't want to lump all of you into that category because I'm not a financial advisor, but I think what we should be doing is looking at it and saying, if my goal is to steadily make money over time, compound that and grow my net worth, then you should always bet on horse A. Always bet on horse A because horse A has a much higher probability of winning that race. It's got the history. And I think that goes back to different trading styles. If you're betting on, biotechs and pharmaceuticals, that's betting on horse B. You're hoping to get lucky and get that 100%, 200, 300% rate of return because they're so volatile. Or I could go out with a fairly stable ETF, hold that long for a period of time, and have a much higher probability of success. So how do we beat prospect theory, Echo? You have to do it. You have to look at all the different trades that you make and say, wow, this one's going to offer me, a 10 to 1 reward to risk ratio. That sounds great. But the odds of it getting that 10 are so slim, right? You can look at the chart and engage the probability of something happening. Now, of course, trading stocks and futures and options and crypto is very different than horse racing, obviously. However, I think the analogy is the same. The evaluation of those horses is done by experts, and they set the odds. They know that horse A was probably going to win. That's why they put the reward is so cheap. Well, there you go, Fernando. He says it's horse A. How do we know institutions flashing markets after chop? How do we know institutions flashing market after chopping or grinding? I'm not 100% sure I understand that question, NB. Give me a little clarity, and I'll answer that one for you better. So, Echo, there is no 100% solution. It's all about evaluation. And you've seen me many times on this program, and if you've ever taken a class with me, you'll see it much more there, where I can be presented with multiple setups, and I go, I don't want to take that one. It just looks too risky to me. I'd rather just forget about the risky stuff. I know that if I bet on the horse that's 80 to 1 odds in the Kentucky Derby, I'm probably going to have to bet on that one 100 times and hit once. Well, that's a net loser for me, right? The odds are set up so that you lose typically. So go with the one that's going to give you the best odds so you have a better probability of winning. And you mentioned about having Dr. Woody Johnson. I'll reach out to him this weekend. I would definitely like to have Dr. Woody Johnson back on and talk about it. I think that, again, psychology is one of the single greatest factors to your success. It's psychology and then understanding, know thyself, right? Go back through, look at your trade, see what you're doing, see how you react in different situations, test your patience and all that type of stuff. Here's the next question. What do you think about Gareth Soloway, the technical analyst trader? Don't know, don't care. Never heard of him. And KF, I'll be honest, there are tens of thousands of people on social media, actually probably even more than tens of thousands. There's hundreds of thousands of people online that are all selling education, they're selling books, they're selling courses and workshops and webinars and seminars, and I don't follow anybody. And part of the reason is I know what works for me. I have my strategy, so I don't want to be swayed or changed or just irritated by other personalities. Also, one of the things I pride myself on is I do this show live. I do this show unedited. I do this show with my own just mindset. I don't want to be swayed by, if I watch Gareth Soloway or whatever his name is, and I hear something on his show, I don't want to be stealing, quote unquote, content. Everything I do is fresh off the top of my head, which is why I don't do typically recorded videos. I like to do it this way because if I screw up, fine. But it also is one of those things I think challenges my brain. So I have no idea who Gareth Soloway is. I've never heard the name in my 20 plus years of trading and investing, but that doesn't mean he's not a good trader. Doesn't mean he's good or bad. I just don't know. So I don't follow him. The people I generally follow are people that I have actually traded with or know how they trade. You see a lot of the guests I've had on this program in the past. A lot of them I have seen trade. I know what they're doing. I know how they do it. And for most of them, I actually know that they really trade, right? I know that they really trade. They're putting on trades with real money. A lot of people will use simulators and simulated accounts and paper trade and say they made all this money. I just don't know. I just don't trust people. So I trust myself. Mike McMahon, one of my good friends, he says you can trust two people in life. You can trust yourself and you can trust your mother. And do you really trust your mother? always love that one. Give credit to Mike McMahon for that one. Sorry to all the moms out there. What other questions you guys got for me? Let's keep them going. Let's see. Mark sent this one in. He says, too bad I didn't buy some TPTX calls yesterday before the close. Yeah, well, I'll bring that one up here. I don't know what TPTX does. I'm assuming it's a drug stock because it says Turning Point Therapeutics. It's up 118%. Yeah, there you go. Certainly you would have done great on that one. But Mark, the trading is not a business of should have, could have, would have. If you bought them, great. I'd give you a pat on the back and let you buy me a beer because you're the one with all the money today if you made 118% on some options, on equity and then on options. I think that would be great. However, don't worry about it. Move on to something else. And, just be careful because these types of securities. If you look at this Turning Point Therapeutics, I actually kind of like what it's been doing over the past 3 months, right? It's not making new lows, but it's actually making higher highs. But before that, it was on a big downtrend. And I can tell you, I have several times, I'm going to say many, but several, probably 3 or 4 times, shorted a pharmaceutical stock that looks like this. And next thing you know, they gap up 100% and just evaporate the entire position or leverage me out if I'm leveraged. So that's one reason I don't trade drug stocks anymore. It literally is not a part of my portfolio in any way, shape, or form. Let's see. Do you ever do stock portfolio reveals? Many YouTubers do that. No, I don't, Michael. And it's not, I tell people what I'm in, but I have so many accounts. I have accounts all over the place. And my big problem with that is, and again, this is why I don't believe that you should trust any trader when they says they're making money, is most people, what they'll do is they have multiple accounts. They can have with the same company as well, and they'll just flash the account that's making them money. That always bothers me. My accounts are always changing. So I have one account that is specifically selling options and collecting premium. I have others that are active day trading. Most of those are going to be flat at the end of the day. I have others that are somewhat long-term, but I'm not really heavy long-term investing anymore. So I'm not going to go through and show all these different accounts on the show. Just not for me. So unfortunately, I don't do that. Some do. That's fine. Does OTA have a simple cross-reference sheet with all the futures with tick sizes, tick value, and E-mini micros listed? I believe so. I know it's in the slide material, so if you've ever taken the futures class, it's in the slides and you have copies of the slides. I know that because I've built it where you've got your softs, you've got your grains, you've got your metals and currencies and bond products. All of that is in the material. My dog? What about my dog? My dog, where is he? He's downstairs. He's waiting for me to go take him for a walk, which now that it finally cleared up here, I will definitely take him for a walk. There you go. Oh, yeah, I'll show you my good-looking sim account. Exactly. And there's so many of them, guys. It blows my mind the extent of these scammers in our financial markets. Absolutely blows my mind. Merlin show is made with free-range trader experience and non-GMO, fully organic info. I like that, Joe. I might actually use that, if you don't mind. I might actually put that as the description for the show. I think that's actually pretty funny. Non-GMO. All right, let's see. Too bad is a trader's most famous words. That or should have, could have, would have, right? Oh, I would have done this. Oh, I could have done that. Oh, you didn't do it. So shut up. Move on. All right, let's see. There's a couple questions come through. Short BBY. All right. So as everybody here probably knows, this one is also blacklisted for me. I can never trade Best Buy again. I will not let myself do it because I am emotionally attached to Best Buy. This one cost me $100,000 on one trade. So I'm bitter about Best Buy. That said, looking at what's going on with the price chart right now, what would we say? The trend is your friend until the bend at the end, right? This is the perfect example. If everybody here knows exactly, if you followed the show for any amount of time, you know exactly what I would have said right here. If you ask me, well, what's going to happen with price? I said, look, I would not look to go long here. I would be looking at shorting at the next supply zone. Okay, well, where's the next supply zone? Oh, well, it would be right here, the origin of this gap. That's where I'd be looking to short Best Buy. And of course, this is after the fact, guys. I did not make this trade, but I'm just looking because I know my analysis. You guys know exactly how I would draw these things. This is perfect. Shorting that into a supply zone. I think that your short on Best Buy is probably a good idea, NJ. Just you're 2 days late, right? Where were you yesterday? Let's see, it says this is Friday. Where were you on Monday or Tuesday? Tuesday or last Friday were perfect. Right in that supply zone, but downtrend, right? It's not an aggressive downtrend, but it's just been going and going and going and going. And, I think you short Best Buy. Short Best Buy. Think about it. If we go into some form of recession and we start to see unemployment numbers increase, which means layoffs, and you're seeing layoffs from Coinbase and Kraken and Gemini and all these crypto firms and Tesla, that's going to start to precipitate more and more. Does that mean that Best Buy is going to start to have greater sales of flat screen TVs? Not unless you get a stimulus check, right? Most people are going to be cutting back. So I think Best Buy might start looking even worse going forward. And keep in mind, they're already up at 140, and now we're almost 50% down from their peak. We were a couple weeks ago. I think the trend is your friend. I think it keeps dropping here. It does not look good at all. Michael wants to know what happened in that trade. You got me with a glass of whiskey in my hand talking about the trade that cost me $100,000. Thanks, buddy. Appreciate it. Let's see. I got to try to remember where this one was. I think it was, I want to say 2013. So it was way back. Let me go back there. Yeah, it was right here. So this is what cost me $100,000. I basically had $100,000 worth of put options. And I was just loading the boat with put options. And I made this stupid mistake. And this is a great learning lesson here for all of you. Basically what happened is Best Buy was the best performing stock, one of the best performing stocks in the market in 2013. Ridiculous. Like, it's Best Buy. I personally walk into Best Buy. I go through everything that I want to look at. I want to look at laptops or iPads. I find everything that I want, and I literally have the phone in my hand, and I bring up that item on Amazon, and I buy it 20% cheaper. Best Buy to me is simply my physical store for Amazon or some other store. Now they're getting more competitive with their pricing. So what I was realizing is, why aren't more people doing this? I mean, if I can save 20% on a $1,000 purchase, that's $200 I can go spend and have some fun on a Friday, Saturday night. So I was shorting, basically buying puts. And I kept buying puts, and I bought the December 18th expiration or something like that. And my options ended up expiring worthless. All right? I was bummed. However, I'd let it ride all the way through expiration. My bad. Guess what happened? January, when they reported earnings, 50% drop in price. Went from $37. This seems weird. It was a 50% drop. Went from $37 all the way down to $26. This right here would have most likely netted me, with the size of my position, close to a 7-figure gain in that drop. Had I just done the January put options, I would have done really well. So I'm a little bit bitter. It made no sense why Best Buy was up that much. And then, look what happened going forward. It's rallied back up. But it went from a peak of $44 all the way down to $22, a 50% decline in price. And unfortunately, my options expired worthless. So there you go, Michael. Thanks for making me relive the pain of my Best Buy trade. Cheers to you, and cheers to everybody on this glorious Friday afternoon. Michael says, have you ever shorted a stock and had the stock pull a TPTX where the stock opens the next day up 100%? Yes, absolutely. I apologize because I want to say it was 2002 or 2003. I was actually flying back to Italy to teach at university. Actually, it had to be 2005 because I came back in 2005, but I still taught at university over in Italy. So I had this short position on a crap pharmaceutical. I looked at their financials. They were losing more and more money every quarter. Revenues were just plummeting. It was just a dying company. No question about it. This thing is trash. I was shorting and short. And I think I had like 2,000 shares short or something like that. And so I left it open, had a stop loss in place, but, get on the airplane, I fly over to Italy. I'm doing all the transportation stuff. I finally get to my university. I get all settled in my room, sit down, unpack all my stuff because I'm there for a month and a half. And I open up my laptop and log in, and this thing had jumped up over 200%. They got some FDA approval for a drug, the one drug they had, and it jumped up like 200%. And of course, it jumped way past my stop limit and basically evaporated that account. Now, not that account, but that trade. I mean, colossal losses. I mean, it was really, really bad. And again, that was the last time. That's what caused me to say I can never trade biotechs or pharmaceuticals again. I had a company that was a steaming pile of dog poop, and all of a sudden they jump up 200% the next day. So it's simple for me. I don't care. Just no more pharmaceuticals or drug stocks, right? I like to I like to reduce risk by using exchange-traded funds, staying in things that have a portfolio within them. That way one stock doesn't burn me. And, as you guys all know, pharmaceuticals and drug stocks can be the most volatile ones out there. Zanzibar, you talked about the TradeStation matrix a couple days ago. What does it mean when there is a parentheses on 2 on the ask size? I don't know. I don't have it up here, Zanzibar. Maybe next week. How about Tuesday? Make sure you ask me that question on Tuesday, because what I'll do is I'll have TradeStation open. I don't have it open right now, and I just don't want to deal with that because I'm just about to wrap up here anyway. But I'll bring up the matrix, and I'll show you how to use the matrix. I'll also show you scanning and filtering. So I can answer that question then. I'd have to see it. Off the top of my head, I can't remember. So basically, you avoid extreme volatility. It's funny that I say that, Doug. I say I avoid extreme volatility, but here I am in cryptos that are moving, 20, 30% in a day. But, I almost feel hypocritical. Well, I'm in cryptos. It moves so much. But with equities, yeah. I'm trying to eliminate gap risk, because a lot of the stuff that I'll do is I'm holding things for a week or a month or something like that. So gap risk is something I'm trying to eliminate, and you'll never eliminate gap risk, but I can significantly reduce gap risk if I'm using an exchange traded fund that's diversified. That Best Buy story makes me feel better about blowing. Oh, $10,000 account? That's easy. Oh, gee, 10 grand. That's a snack. That's Breakfast Club stuff there. Yeah, no, it's tough when you lose that much. I've had a couple, and I'm happy to share. I've done it in the past multiple times on this program and on Power Trading Radio, where I'll share my losses. And I think that for all of us, those losses should be a reflection of your growth. Meaning, talk about your losses. Don't go out there and boast about, I made $100,000 on a trade. Shut up about it. Don't brag about that. It's more important to talk about your losses, because it sticks in your brain why you lost that. And then you'll remember it next time and say, I'm not going to put myself in that situation. Making 100 grand, who cares? Obviously you want to, but it's not worth boasting about. Go out and treat yourself to a nice dinner or buy yourself a gift, but just shut up. Don't boast. I'm not going to get on this program and be going, hey guys, I made $50,000 today on a trade. I'll never do that. If there's a great trade that was an amazing setup and everything, I'll probably show that and explain it, but I'm generally not going to talk about the big gainers. I'd rather talk about the losers, because that's what makes you a better trader. Okay, last thing before I wrap up here and give you some economic data, because I want to get out and enjoy some sunshine. Yeah. Where in Italy did you teach? Cheers from Turin. Benvenuti. I actually lived in Milan from 2001 to 2005, but io ero professore di economia di finanza a facoltà di economia di Ancona. So I taught in Ancona for, I want to say 5 years, 6 years. I created a trading lab down at University of, or Facoltà di Economia di Ancona, and I loved it. I absolutely loved Ancona. I had amazing people working with me, and I did something that was so outside the box. Honestly, if I told you guys what I did, you would just wish that this was available at your college, university. I'll tell you, why not? Since we're just having fun here today and I'm drinking whiskey. So, long story short, I was brought down by the company I worked for in Italy, which was a bank, a trading kind of company bank, and they had a software, and they said, how can we get more visibility and sell more of our software? I said, get it into the colleges, because the colleges will then go to banks, and the banks will want that software, et cetera, et cetera. So they said, can you create a course for university? I said, sure. Long story short, I create this whole program, I start teaching it, and I was like, what in my mind would be the ultimate understanding of financial markets? Like, how would I benefit the most personally from an education in college? And I said, I'm a hands-on person. So what I decided to do, the class was Tuesdays and Thursdays. So what I told them, Tuesdays was generally lecture and action. Thursday was portfolio allocation. So what I did, I had this huge spreadsheet, and I made every student manage a $100,000 portfolio. Not real money, right? But basically that $100,000, and they could go long, they could go short, any stock on the US markets or the Italian markets. And so what I did is I said, here's your rules. You cannot open any trades without three things: your entry price, your stop loss, and your price target. And so what I would do is, over the course of that week, right, they had to basically hold a position for 7 days, from Thursday to Thursday. Over the course of that week, I would track every single trade that they make. And every single year that I taught that program, as a class, so there were some students that took high flyers and lost, but as a class, we beat the S&P 500 by a huge percentage every single year I taught that class. Why? Because everybody had a strict stop loss manager. I forced them out of those positions at their stop loss. Sometimes they hit their targets, which is 3, 4, 5 to 1. But to me, that was awesome. It was a great experience, teaching university, especially when most of them don't speak English, and I didn't speak Italian to start, but now I do. Ma ciao, grazie per la domanda. Last one here for Jeff. So I mentioned the other day about creating some indicator courses. These are not going to be a for sale thing. They are going to be freebies. So you mentioned on your show this week that you were working on developing a technical analysis video for OTA. Can you share some more information on this? Is it going to be in the All Asset Mastery? Is it going to be a signature series? Is it going to be an hour with the pros? I'm geeked out on technical analysis at this point, but I'm really looking forward to it becoming available. So it's not going to be a paid thing. This will be something that is going to be for free. And they're designed, I will tell you, it's designed to be, at least the way I'm building it, is going to be lead acquisition for Online Trading Academy. So here's the idea. The vast majority of people who start out trading and investing, they hang their hat on indicators. Meaning, oh, I'm using moving averages to make my trades, or Bollinger, or MACD, or stochastics, or RSI, you name it, ADX, there's a plethora of them. So I'm going to go through the top 10, and then I'm going to do patterns as well, and say each video will be structured in a very simple format. What is it? So let's talk about RSI. What is RSI? Okay, here's what it is, and here's how it's constructed. How do we use RSI, right? How do people use RSI? Boom, and I'll explain that. And then I'll say, what are its shortcomings? Like, what are the problems with RSI? There's definitely issues. And then the fourth piece will be, how do I use this the right way? What's the proper way to use this? And then, of course, if you'd like to know more about education and core strategy, come to Online Trading Academy. So these are going to be marketing pieces that are probably going to be on YouTube. We haven't figured out exactly how we're going to place them, but I'm going to be pushing for tooth and nail that they are going to be free for everybody. And that way, if you have friends that are using different indicators, send them that video, because quite often people are using them incorrectly. And it's very high level. I'm not going down into the weeds on every little detail of it, but just so we understand, here's what it is, here's how it works, here's what's wrong with it, and here's how we can use it the right way. That's what it's designed to be. I bet that whole class is financial security. You know what, OG? It's like probably one of the most proud moments in my life. So, I wasn't that much older than some of my students. I had them by a few years, but I'm not the old professor. And at Italian universities, they're all fairly old professors. We had on every semester, multiple Italian banks would send in representatives from the bank. So you had IMI and a whole bunch of other ones. I told them, you cannot interact. I don't want you interacting with the class. You're welcome to sit and observe. And they would sit in the back, all in the line, and they were headhunting students. And if you understand how difficult it is in Italy to get a high-paying job, like you get a college degree, you might make $1,500 a month working for a bank, right? You start off dead low totem pole and you don't make much money at all. What was very interesting is a lot of my students came up and thanked me because not only do we get jobs right away, but they were literally saying, hey, we'll pay you a way more than most because you know all this stuff. And I was like, I'm so proud. It was great to see I can shape them and kind of help them understand how life really works. Most the complaints I got from my students in Italy were most professors would literally give them a textbook and say, read this. Okay. And then they weren't allowed to ask questions. The professor would just say, okay, we read it. Now this is important, this is important, this is important, go on a break. I was like, how is that education? So anyway, we won't rant on that one anymore. When do you think the videos will be released? I'm going to try to record one not this week, but the coming week. We're going to try to record one. I have stochastics done. I'm going to hopefully have moving averages and Bollinger Bands done next week as well. So probably the next few weeks. Yep, best part of being a teacher is seeing the end result and seeing your students come back to you. And I had one student actually out in Chicago who landed a job with Citadel Derivatives, which is like, you've reached the pinnacle. You reach the pinnacle of financial markets if you're working for Citadel or Goldman Sachs. I went to visit him in Chicago and he's making huge money. He loves what he does. And he says the only reason, he goes, I didn't even want to do this, but he says, what I learned in your class completely changed me, and the connection I made through the banks that hired me got me here to where I was today. And I was like, you know what? You can pay for dinner. It was awesome. No, it was really good. That's why I really wanted to do that thing with Larry yesterday, because I believe that, as adults, we get a little rigid in our way and we have our expectations of how life is and what we want to do. But as young college students or, the younger generation, they're still malleable. You can still give them guidance and hope and opportunity through your skill set and your knowledge. So, if you got some great skill set, go out there and teach it. All right. We could probably do trend lines as well. So here's what's happening for... Oh, I think I picked the wrong day. Yeah, I think... Oh, you know what? Okay, so this is all Pacific time. It's not the wrong day. So here's what we've got cooking for Monday. So Monday, June 6th. You can see we've got a few economic announcements here. There's the Reserve Bank of Australia rate statement. That's at 9:30 p.m. Pacific time, but that'll be just after midnight on the East Coast Eastern Standard Time. So that announcement, you can see they're going from 0.35 to 0.75. That will really be on Tuesday, and nothing going on for the U.S. And there is really no important earnings announcements for Monday as well. Next week is a really slow week. Now, for Monday's show, I have a guest who I feel guilty because he was supposed to be on a long time ago, but I was a horrible correspondent. I'm going to talk about collectibles and kind of the, as an alternative investment, looking at sports memorabilia. Completely different than what we normally talk about, but it's interesting to see. I'm curious to see what perspectives he'll bring to the table with regards to investing in sports memorabilia, kind of the do's and don'ts, what you should look out for, and, maybe something different for us. So that'll kind of be the show for Monday. If you guys have something that you want me to specifically talk about, you can go to the YouTube video, put it down below the YouTube video. I know we've got a lot of new people here, which is awesome. So cheers to the new people. Hit that subscribe button. That helps out the channel. Put your comments down below the YouTube video so I can bring them up on Monday's show, or if you have something specific, you can email me at TraderMerlin@gmail.com. I think I got to most of those questions. There's a couple others I need to get to on Monday's show, but I need to do some research first. So that'll do it for this show this week. Hope you guys have a fantastic remainder of your day. It's Friday. Go out and do something great. Go out and spread some love. Make people happy, specifically yourself, but make others around you happy. And we'll see you guys all on Monday for another fun session on the Trader Merlin Show. Take care, everybody. Cheers.